The most common questions I get on all my videos about the first lien HELOC is, why don't you just put the extra cash towards your mortgage payment every month? The problem with doing that is you tie up every last dollar of your free cash flow back into your mortgage, which doesn't favor you, it favors the bank. Mortgages are so rigid. You can't just walk into a bank and say, hey, I've got $1 million of equity, I want to pull some cash out. You have to either refinance or apply for a home equity line of credit, provide your documentation to the lender, and that process usually can take anywhere from maybe 2 to 3 weeks or maybe up to 30 days just to get access to your funds again. And the other issue is that if you try to mimic the HELOC strategy, you'd have to put every last dollar into your mortgage every single month without fail. I don't care if you have an HVAC that goes out, you have to do some sort of repair in your home, you've got to devote every last penny into your mortgage and do that month in and month out and never deviate from that program. But that's why the first lien HELOC is so advantageous, is that interest gets calculated on a daily basis. Every time that you make a deposit, you're effectively lowering the loan balance, whether you deposit $1,000 or you deposit $20,000. The lower the balance goes, the less interest you're paying on your mortgage. Think about it like this. How much money flows through your checking account in the course of the year? Right now, when you get paid, money sits in your checking account until you pay your bills. It does absolutely nothing. It's not earning you interest, it just sits there. Think about the HELOC for a second. If you got paid today, that deposit would have lowered the loan balance, which lowers the interest that you're paying on your mortgage. So even though we use the HELOC to pay for our bills and expenses and credit cards, that net number that's still left over on the HELOC pays down the mortgage continuously, and you always have access to cash. It's a 30-year line of credit, so we're not limiting the liquidity that you have as a homeowner. I use this strategy to flip houses. I can take my profits from a flip, pay down my mortgage, replenish my line of credit, buy another property, and I can continuously use my line of credit. And if you see in a lot of the videos that I show you, we're getting the effective rate on that mortgage down to 1%. Sometimes we even have clients that get it under 1%. The long-term play with the strategies, we get to turn ourselves into the bank. Instead of continuously applying for mortgages and trying to qualify for a loan every single time, you can pay this thing down, use a line of credit, and pay cash for the next investment, pay cash for a business, do something that's going to create wealth and cash flow for yourself today. I know it sounds too good to be true, because when I first heard the strategy, I felt the exact same way. But that's why I always encourage you, if you want to get on Zoom and go through the numbers, we can see if the math makes sense. And if it doesn't, continue doing what you're doing. No one's trying to force you to use this strategy. However, if it works for you, in most cases, it's a very stark contrast from what you currently are going to pay to what the loan can do for you. As an investor myself, I love talking about the strategy because I know I can help you buy your next investment and build your portfolio faster than what you're doing right now. Don't let the bank keep ripping you off. Send me a DM and I'll teach you how to do this.